Hello, this is Kenton Stamper, also known as the Be More Tax Man. On this video, I'm going to be comparing the child tax credit for 2017 versus 2018 and looking at the effect that the increased credit has had when you factor in that the personal exemptions have been eliminated. The first example I'm going to use is head of household. The income for both years will be 74,999, and there is one dependent who is eligible for the child tax credit. For 2017, there is 57,549 in taxable income. That's the 74,999 minus the standard deduction minus the taxpayer's personal exemption and minus the dependent exemption. So that brings you down to that total. The tax liability for that is $8,634. And then you have a child tax credit of $1,000, and that brings it down to $76.34. For 2018, you're going to take that same $74,999 minus the standard deduction of $18,000, and you get to $56,999. The tax on that is $7,083. Child tax credit of $2,000 brings you down to $5,083. Very big difference when you look at head of household. Next, we'll look at single. Again, the income is $74,999, and there's one dependent that's eligible for the child tax credit. For 2017, there's 60,549 in taxable income. The tax liability is 10,870 on that income. You have the child tax credit of $1,000, and then that brings you to a tax liability of 9,870. The way we figured that was the same way that we did for head of household. For 2018, taxable income's a little bit higher, $62,999. However, the tax on that is only $97.94. You have the child tax credit of $2,000, and that brings you to a tax liability of $77.94. So again, the bottom line is about $2,000 plus less. So that's actually a pretty good number, especially when you consider that you start off with a number that is lower than the total after you add the child tax credit in for 2017. For 2018, the number is lower. So it can only get lower from there. The next example we have is of a qualifying widow or widower. Income again, $74,999. One dependent that is eligible for the child tax credit. We have $54,199 in taxable income for 2017. The tax liability on that is $71.94. There's a child tax credit of $1,000, and that gives you a total tax liability of $61.94. For 2018, the taxable income is $50,999. The tax liability for that is $57.36. $2,000 in child tax credit and tax liability of $37.36. So this one is even more drastic. It's over $2,400 less. So this one is a pretty big decrease. Um, and as you can see, you're really saving some money here. The next example is married filing joint. For this one, the income is $109,999. There's one dependent who's eligible for the child tax credit. For 2017, taxable income is $85,149. The tax liability on that is $12,759. You have the child tax credit of $1,000, and that brings you down to $11,759. For 2018, taxable income's a little bit higher. It's $85,999. The tax liability for that is $10,794. The child tax credit is $2,000, and that brings you down to a net liability of $87.94. So now we're almost at $3,000 with this one. So it is a pretty significant decrease in your tax liability. So again, we see where this is coming into effect. The last example that we'll look at is married filing separate. Income for this, $54,999. One dependent that's eligible for the child tax credit. For 2017, taxable income is $40,549. Tax liability, $5,870. Child tax credit for this is $1,000, and that brings you down to a tax liability of $4,870. For 2018, we have taxable income of $42,999. The tax liability on that is $53.94. The child tax credit is now $2,000, and that brings you down to $33.94. So this one is not quite as drastic as the others, but still, almost $1,500 is nothing to sneeze at. On the surface, it looks like the increased credit made a big difference, but did it really? Let's dig a little bit beneath the surface. The answer really is no. The increased child tax credit basically offsets the elimination of dependent exemptions at threshold limits from 2017. 25% of 4,050 is $1,012.50. For 2018, it was proposed to be $41.50 for an exemption. However, that didn't happen. But 22% of that, which is the new tax rate, is $913. So essentially, that $1,000 increase is really only an $87 increase. Dependents not eligible for the child tax credit, they go from having that $913 deduction in your tax liability to only $500 because that's the credit that they put in place of exemptions. So that $500 only helps if you're in the 10 or the 12% tax bracket. And really the 12% tax bracket, that goes from, 400, basically that is $500 at the 12% tax bracket. And the 10%, you're saying a little benefit. Other than that, you're losing money once you get to the 22% bracket. What really accounts for the major difference in tax liability? The increase in the standard deduction combined with the decrease of marginal tax rates makes the actual difference. And it makes this child tax credit look much more dramatic than what it really is. Let's look at single. The first 8,000 or so is taxed at 10% for both years. So 55,500 of it there's a 3% difference. From 15 last year to 12 this year, and 25 last year to 22 this year. So that's $1,665. Then I had to add back in the amount that I deducted for an exemption. So the taxable income was $60,549. I added back $4,050, and that got me to $64,599. I subtract out the $62,999, which was the taxable for 2018. That's $1,600. I add 25% of that, because that was the marginal tax rate, back to that 1,665. So that gives us 2,065. And the actual difference was 2,076, but this is a good way to approximate the difference. And if you can do this for each example, and you'll get approximately the right answer. So this is the real reason why these numbers look so different. But again, if you have children 17 and older or other dependents, you're actually going to see an increase in your taxes, because you're going to go from that 913 that you would have gotten had they had exemptions this year to 500. So that's where you're going to see it. But because of the difference in marginal tax rates, it's probably going to be a lot. It's going to take a few dependents before you actually see your overall tax liability increase. Based on my analysis thus far, it looks like this legislation was designed for smaller families, 1 or 2 kids, that are 16 years and below. These are the people that will reap the main benefits from it. But thank you for watching. My contact information is as follows. My main phone number is 443-630-6372. My former phone number, which is still active, is 410-565-8631. The fax number is 410-630-5555. Email is info@bmoretaxman.com. Website is www.bmoretaxman.com. I have 2 Facebook pages. One of them is facebook.com/bmoretaxman, and the other one is facebook.com/bmorefinancialservices. My Instagram is @bmorefinancialservices. Please follow me on there. Thank you, and talk to you soon.